Welcome back to Reimagine 2021. I am Yonah Hochhauser, and today I'm glad to be joined by Lior Messika, founder and managing partner at EdenBlock. Lior, thanks so much for joining us.
Yonah, thanks for having me. It's a pleasure.
All right. Well, Lior, want to first give us a little background, or viewers, a little background, kind of who you are and how you got into the blockchain space?
Yeah, so my entrance into the blockchain space, again, is not really conventional, and I guess not really like any other person that I know. I mean that our entrance, I think, collectively into the blockchain space has been really from all around, right? And so I come from the investment, you could say, world. I held numerous roles as an operator in a variety of different companies, B2B companies, B2C companies, until I took the role of CEO at Messika Holdings, which is a single family office that operates across a multiplicity of sectors. And so what we've done for the past 50 years is we built companies, B2B companies, B2C companies. One of our B2C companies, the fastest growing company in the history of its market. And it's been really a pleasure to kind of see that entire unit grow as well as its corresponding businesses. And so really my goal and my role at Messika and at the family office level was to one, keep us out of trouble, which is funny because I then entered into the blockchain space. But really, I mean, so caring for our diversification as a financial institution of sorts, right? And so I developed a variety of different investment strategies that deal with different asset classes, ranging from all the way from real estate to private equity. We've done a lot of private equity, infrastructure, and capital markets exposure that have been more than exotic, to say the least. And so really, I mean, that brought me face to face with numerous founders and early stage kind of entrepreneurs, along my journey, and starting to invest our capital into an asset class which is called venture capital, with bringing, of course, with me all of my experiences from different areas and from working with different asset classes, and of course, from building companies together with my family. I think that the most important thing to me was, at least about the blockchain space, and specifically VC in the blockchain space, was it was kind of brainless, right? It was a almost no-brainer to think about when it came to me getting involved with founders working with frontier tech, right? And so frontier tech to me was being able to study the intersection of technologies and business model innovation was extremely interesting. And so again, with our diversification into VC as an asset class, I got to start to work with a lot of founders in the blockchain space. Now into EdenBlock and kind of how we started EdenBlock. Again, we really had a very specific idea as we started to invest as to what blockchain could be used for and where blockchain could actually provide to be useful and actually add value to a variety of different value chains. And so we began to not only research and kind of analyze the space from a very, very meticulous perspective, getting all the way down to the technical details and really trying to understand the technology for what it is. And we emerged with a couple of interesting learnings, right? So number one, blockchain is not disruptive, right? It's what you do with blockchain that's actually disruptive. And having that in mind in 2017 already, we were kind of, you could say, very, we like to call bullshit on a lot of different crypto projects or networks that were boasting some kind of utility, but really didn't have it, at least in their incentive systems, et cetera, to actually provide that utility long term. And so one thing led to another. We invested in 29 companies so far, protocols / companies. We've worked with many of the world's most brilliant teams. We're today the most active investor in Europe, at least on the institutional level, and we've had the immense privilege of again working with just amazing founders who are out there solving real problems by leveraging blockchain technology. And so that's a little bit of how I got into the space and where I am today.
Well, I mean, you mentioned a good point there where it seemed like for a long time, a lot of companies were just adding blockchain, the buzzword, to their name or to their offerings. It's kind of like as if it means something as just a word itself. And kudos to you for really doing the research and separating the bullshit from what's real. Now, I was researching you guys like I do all my interviews, and on your website, you kind of break down potential investments into different categories: a gateway, new market disruptor, and low-end market disruptor. What do those mean, and what would be the traditional world equivalent, or the traditional VC world equivalent of those names?
So I actually have some great examples, and so I'll give you a little bit of background on how we really break down our investment strategy, and really, I mean, so that is the backbone of how we think about companies, and so you might really kind of notice that while there's different types of businesses that we invest into, there's also different areas in terms of verticals that we actually invest into, and so having this gateway, new market disruptor, and low market disruptor classification, we would only invest in companies that have that kind of modality within a variety of different verticals as well, right? Namely being financial services and financial assets, supply chains, and last but definitely not least, data and security and privacy, which we kind of bundle all into one vertical because of how inherently close they are to each other in terms of usability in the marketplace. And so, going a little bit, maybe taking a step back into really our theories and how we think about things. The ideas of disruption, right? So disruptive innovation is actually a business theory that emerged out of Harvard in, I think, 1993, sometime in the 90s. It was authored by a very, very brilliant guy that was really kind of looking at trying to understand how do incumbents get displaced? How do startups in the first place are able to build value all the way to actually toppling down, the biggest and brightest, or you could say the largest incumbents in any given industry. And so we were really given that kind of framework from that person. And on top of that, we kind of, as soon as we understood that this is actually a business theory that's been proven to a very, very large degree, right? And so, more close to 80% of all, you could say, of that research has been really validated through this theory. And thinking about disruption, right? So what does disruption actually means? And so it actually means two things, and it can come in two different, you could say, modalities as well. And so there's disrupting a market, or disrupting an industry that is already alive, that is already there, is an entirely different thing than, you could say, creating a new market. And it's really important to understand that those are two different kinds of disruption. And so I'll give you some examples, right? What made the iPhone disruptive was not the iPhone, because again, it was just an okay phone, right? It had a touch screen. It would be able to, it had a camera. You couldn't even take videos on the first iPhone, which again, as a product, it's not really the best product in the world. What made the iPhone disruptive really was the App Store, right? And that was actually able to expand totally an entirely new market. What kind of market? The usage of applications, okay, or actually given access, okay, to hundreds of thousands of developers through your handheld, you could say, mobile phone rather than your PC. That was truly disruptive. Why? Because it actually competed against non-consumption. One day you didn't have it, the next day you want it, okay? You didn't even know that there was something that could kind of, fulfill that void, besides your PC, until the App Store came out. And so that is a great example of new market disruption, or what I would call really competing against non-consumption, which Bitcoin has done to a really, really large extent, right? One day, nobody wanted Bitcoin. The other day, or the next day, everybody did. And so creating that kind of demand is actually, expansionary in nature and highly disruptive. And so to give you a real life example, at least from the DeFi, or from the crypto space, sorry, I kind of beat myself to it. DeFi is deeply disruptive in the sense that it is creating parallel or new markets, right? DeFi right now is not saying, look, we're going to put bankers out of work. Maybe, I mean, it's a good buzzword, or it's a nice kind of narrative to say, but it doesn't really do that yet, and it has not done that yet, right? I mean, people are still banked, or trying to get banked by central authorities, et cetera, et cetera. And so DeFi as a movement, right, or the products associated with DeFi have been able to create that kind of new market disruption. On the other hand, you've got products and businesses like Airbnb, for example, that actually emerge within a a real market within a market that's already established. And today, I mean, they're talking about doing an IPO, right? And they're really, kind of putting up a real fight with the likes of Booking and Kayak or whatever, right? And so what happened with Airbnb actually is that they started at the bottom of the market. They've been able to capture the lower ends of the market, which is why we call it a low market disruptor, right? They've been able to go out to the market with a worse product, okay? And that's really important to say, because what was happening and what kind of created that kind of space for Airbnb to become a disruptor is the idea that some people, a hotel through Booking, even if it was a 2-star hotel, was just too good. And people wanted to be able to have, much lower quality for much cheaper price. And over time, Airbnb was able to scale the quality of their product. And so that has created disruption within a live market from the bottom up. And so if you kind of bring that to the blockchain space, or how we kind of look at it, we see a lot of companies leveraging blockchain to solve real world problems, right? Across, for example, supply chains, right? A huge vertical for us. And by the way, supply chains move 50% of the world's GDP. That's $45 trillion a year moving through supply chains. And if you're able to solve problems, and there are many, right, within that supply chain, then you can actually emerge as $1 billion company in a much more, you could say, predictable way, right, than you would as a DeFi protocol. And so we kind of look at these two modalities as very, very important, you could say, models, okay, of creating value. And so I hope that kind of answers your question on the two disruptor pieces. But then the gateways is really kind of how we applied it, or how we kind of look at the market, and that's our own addition. And we look at gateways as companies that are able to accelerate the adoption or the ease of use of all these new market disruptors out there, right? And so you could call gateways the kind of infrastructure stack that provide services or provide solutions either to developers or to institutions. So if, let's say, banks want to be able to custody their crypto, right? One day they're going to have to use an impenetrable kind of solution that answers their needs. And so we invested into a company called GK8 that actually we classify as a gateway. Why? Because they're actually making it easier for that kind of adoption to occur. And so those would be the three classifications of how we look at businesses. And ultimately, every single company that comes into our pipeline, gets classified as one of those three. Otherwise, it's a no-go.
Right. Very cool. I mean, the new market and the gateway, I kind of knew. The low-end market disruptors, very cool. Thanks for enlightening me. I actually didn't know of that segment. And I could see how a lot of products just inevitably, or just because of the nature of where blockchain technology is at, would fall under low-end market disruptor, just because it is still a buggy, brand new technology. But obviously, the sky's the limit there. So it's really interesting. And like you said, this is a new industry, a new asset class, a whole new field. Essentially, it's all built off this underlying blockchain technology, which is very new. But as an investor, as a VC, someone has to allocate pretty large sums of money and assess good investments. So if you're a traditional VC, you can look at the team, you can look at the technology, look at many things. But when you're a blockchain VC or crypto VC, how do you deal with a lot of projects having anonymous teams? Would you even consider a project with an anonymous team? How do you go about it?
I think that's a fantastic question. I got to be honest. We're very. So you could call it old school, but not really. We're very, I guess, rooted in the real world when it comes to what kind of teams and what kind of projects and what kind of enterprises we'd like to back. And for us, one of the more defensible things about a business is its leadership, always, right? And of course, the lines get blurred when you've got SushiSwap, which is a bunch of no names, right? Who are getting just tremendous kind of volumes and traction in the market out there. due to really, I mean, just clear incentives, right? And the demand being there, of course. But to us, I mean, it's very difficult for us to actually de-risk an investment. I think you lost me for a second. I'm here.
Yeah.
It's actually very difficult for us to de-risk an investment on the premise of, hey, this just sounds cool, right? And so whenever we invest and we're very early investors, which means that we actually invest in companies at the pre-seed to seed level, where there's almost always a team, right? It's almost always before it hits the market. I mean, it is, and it's pre-launch, and you know, whether it's a token, a network, or a company that is just starting to build itself, you know, we're very, very heavily reliant on the team. But of course, I mean, the parameters really change. I would say that the fundamentals don't change, right? In early stage kind of investing, whether it's, you know, blockchain or artificial intelligence or cyber, it doesn't matter what it is. I think that we're all kind of looking at the same fundamentals, but the parameters themselves might change, right? And so expertise is in the field here is actually a lot more important in many cases than experience, which we're now starting to find out, right? Because there's very little experience in the field, you know, to begin with, right? It's not like these people have been building crypto networks for the past 20, 30 years. And by the way, I mean, the research has been there, yes, but the experience of actually building out businesses and you could say networks or communities or services through these networks is brand new. And we don't know a lot about it. And so this is where I guess a lot of the differentiators come. But for us, the fundamentals are quite the same.
So that's on the assessment side, you know, and right now pretty much I'm trying to dissect and draw parallels or differences between traditional VCs and blockchain VCs. So that's on the assessment side, but on the return side, you know, when you're a VC, you find a product or a team, a project, you say, you know what, I believe in them. I'm going to give them the seed money that they need to succeed, to scale, whatever it may be. And I'm in return going to get equity, or I'm going to get, you know, a piece of ownership. And I think that as a whole, this company will grow and I'm going to see a great return on my investment. But once again, in the blockchain world, there are certain, and we're seeing this more and more in the DeFi space, where fair token launches, where the entire, whether it be that there is no equity to share, whether it be that this is a company, a lot of the value here is in the tokens and not even in the companies. You know, let's say it's the Ethereum Foundation. A lot of times the foundation doesn't even hold the value. It's actually in the network itself. So, you know, as a VC looking in the blockchain space, how do you even structure deals? You know, whether it be a fair token launch, whether it be, hey, I might have equity in this company, but this company doesn't necessarily, if this protocol, this open source protocol skyrockets in value, that doesn't necessarily increase the value of my stake in the team. So how do you have to uniquely structure deals in the blockchain world?
That's a really good question, and I think the industry is still finding out how to deal with that, right? I think that ultimately the short answer would be, look, if the business model revolves around a token, then that's what I want to be holding. If the business model's relying on some kind of a you could say a revenue stream that is in fiat, that is in dollars, you know, let's say I provide you with a service, you pay me for it, right? And we see that a lot, right? There's a lot of B2B kind of, you know, business models that are selling to enterprises, or that are selling, again, solutions to all kinds of, you could say, participants within different value chains, and they're making just straight cash, right? And where blockchain actually just plays an enabling or kind of supporting role, you know, under you know, and is usually associated with a bunch of different technologies, right? Blockchain can actually work best, you know, in real world use cases where it actually works, you know, with IoT or with artificial intelligence for all kinds of different, you know, automations and things like that. And so it really depends on the business model of the company. And this is why we're kind of always thinking about, you know, these, you know, low, new, or different kind of, you know, market disruptors. And once we understand the premise of the business, then it's a lot easier for us to understand what do we want to hold in that company or in that kind of journey. And usually it's not really clear in the beginning. And so, you know, the early, you could say, answer that we as investors have developed to this and to become kind of an industry standard, right, is look, if today I'm investing in this really, really early stage team and they merge really, really successful as just a centralized, as a business, right? Then I would love to again, just be on the equity side. And if they're planning, a fair token launch, hopefully, then perhaps that's where I'll see, most of the returns or most of the value accrue. And of course, I mean, that touches on governance, because what you're really asking is, where do we feel like we're de-risking ourselves? Where do we feel like we're actually investors, right? Because ultimately, if I put $2 million into a seed round of a company, I want to be able to know at least what is my stake, not just on the monetary side, but specifically on the governance side. And so, of course, having a board seat in a real business is very, very clear, and you could say the mechanics around that and the properties of these types of relationships are very well understood. Whether it's a company, again, building with blockchain or anything else. And on the crypto side, this is where things get interesting, right? Because your stake in the governance of the network really is correspondent to how many tokens you hold, usually, or how big of a stakeholder you are in that network in different kind of ways. But there's no real way of, again, kind of really truly influencing the network. It's not like I can sue my founder, if he does something I don't like with the network that's not his. And so this is where things kind of get a little bit more complicated. But we're very, very big advocates of on-chain governance. We're very, very big advocates of community-led decisions, and I think that we're seeing some amazing governance models actually take flight and show us in real time that things are working, and at least on chain. And Compound, for example, which whose governance model has been forked just to an incredible extent, has been very, very I guess incredible at instating those kind of standards for how on-chain governance happens. I mean, Aragon is another project that I'm sure you've heard about, has been doing a lot of work in that area. And so it's still something that we're figuring out, but there's early signs of certainty on that front. And I think that ultimately, as an investor, my goal would be to be a stakeholder in those networks, because those networks can capture so much more value and extract less value ultimately from the players participating in that network. And this is what we're aiming for in a decentralized kind of world, right?
Mm-hmm. Yeah, and especially you're talking about becoming a stakeholder in different networks. Obviously, the Bitcoin network is proof of work, but one way a lot of people view an investment in Bitcoin as buying a Bitcoin or buying a portion of a Bitcoin, and that is an investment. That is a kind of vote of confidence in the system and a belief. But a lot of people who have crunched the numbers actually find that if you believe in Bitcoin, investing in Bitcoin mining might actually be a better return on investment. Have you guys looked into or considered or even currently invest in any sort of Bitcoin mining setups?
We've looked at a lot of companies that deal with Bitcoin mining, right? Which today is extremely profitable. I agree with you at scale. And again, so we can only do what we're actually good at. We're not miners. We tend to support people who we believe are targeting extremely large or fast-growing markets, hopefully both. And so Bitcoin mining is one of those markets. Yeah, I definitely think that there's a tremendous value in that. Am I going to be the one to put together a mining farm? Probably not, at least not anytime soon. But yeah, I definitely believe that the right markets will receive the right funding, and ultimately I think that Bitcoin as a market, or again, as probably the most disruptive force in that that we've seen come out of the crypto space, is definitely one to watch out for.
Mm-hmm. Yeah, I mean, for sure. If we're talking about markets, I mean, I think when Bitcoin started getting big, and then Ethereum hit the scene, and us early crypto adopters starting feeling the excitement, and I think that early on, a lot of people, even still today, thought that disruption, that big use case would be in the finance space, in the fintech space. But what we're seeing in actuality, in terms of real world use, not in terms of, hey, the crypto user is using this to get more crypto, but in terms of actual mainstream usage, we're seeing that in the supply chain space. For a number of reasons, whether it be cost of implementation, in terms of regulation issues, a bunch of issues, supply chain, it just seems to be the easiest, the quickest, and just happens to be where we see that real world adoption amongst mainstream users, amongst actual users in the real world, not just crypto early adopters. And so you mentioned supply chain is one of those verticals where you guys are investing in a part of, if you would. Now, I wonder, when we're looking at the supply chain space, and obviously you're involved with these companies that are trying to get in, like you said, whether they be low-end market disruptors or market disruptors, when they actually go to the big conglomerates, to the shipping companies, to the port authorities, to whoever would actually be implementing and utilizing the supply chain technology, what is the biggest hurdle they have to jump? Is it that this technology is just so new, they don't trust anything new, they like things the old way? Is it that we're not sure this regulation-wise, is regulation holding it back? What is the biggest hurdle or pain point for actual real-world implementation of the supply chain that's built on blockchain?
That's a fantastic question. I think what a lot of people are missing, or what a lot of the market is missing right now, is understanding how to do the right analysis of benefits for price, right, on the implementation of a specific blockchain solution or product across a value chain, right? And so what we're really seeing is, I think, either enterprises are kind of rushing to it as, blindly as a bat, right? Just to say, look, hey, we can tell our public investors in the stock market that we're working with blockchain, but really not doing much. We've got like 5 POCs running, but we all know that POCs mean very little at this point in the market, specifically when it comes to blockchain, right? Or right, we're seeing very, very sensible enterprises, like you said, that understand how to leverage the right kind of properties when it comes to blockchain. And so really, the pragmatic use case, or the pragmatic case for blockchain, as I would call it, really would start by providing you, right, to the enterprise or the incumbent or whatever you want to call it, a very detailed and accurate cost analysis of this kind of implementation. Because ultimately, I got to be honest, right? Today, blockchains are not cheap. Blockchain doesn't make things just magically disappear or problems magically disappear. What do we use blockchain for, right? And there's kind of 3 properties that I really like to go back to when we're talking about why do you need blockchain in the first place. And so when you're talking about implementing blockchain, there needs to be the need for a single source of truth, right? So if there are a lot of kind of parties that would argue, again, for their own sake, either maliciously or not maliciously, that that is the truth, right? That is something that we can trust. Let's say I'm moving let's say I'm moving 10 tons of grain, right? I want to be able to show that it's got 12% of humidity. I want to be able to show that it's got these kind of quality parameters, and so utilizing the blockchain to verify that kind of information could be very, very valuable for the other participants as well as to myself along that kind of value chain, right? But at the same time, we need to understand that there's costs that would incur by utilization of that kind of technology, whether it's by paying a service fee to the application layer, right, which would be a thin kind of application layer on top of those kind of protocols, which would be semi-centralized. For now, I don't really see a lot of supply chains relying on completely decentralized networks, because again, the efficiencies are just not there yet. So, we're seeing a lot of blockchains like Symbiont or Hyperledger being utilized across supply chains. And so once we're able to kind of understand this is exactly, the problem that we're solving, and, us utilizing blockchain is costing us this much, but it's actually saving us this much, right? Yeah. Then actually it starts to make sense. And so this is why, we've really seen a lot of enthusiasm, about blockchain's entrance into supply chains in general. And another kind of interesting point that I've heard about is there's about 5 supply chains that make up most of the CO2 emissions in the entire world, right? And so it's kind of there's so many different perspectives and kind of angles attached to supply chains in general, where blockchain as a means of providing a single source of truth, of making you could say interaction across systems or between parties programmable and automatic. And of course, when you need the right incentives to actually make that happen, then or you could say the immutability on top of all of these things, then this is where blockchain really comes as a shine, as a warrior or knight in shining armor to actually provide the right kind of solutions at the right kind of time. But that's really rare, and we're seeing that it's really, really difficult to actually effectuate in the field, in the market, and at scale. And education, and obviously, I mean, we just want to see that work. And so the more we see it work, across different kind of verticals, then the more you could say enthusiasm we can expect about these kind of use cases as well.
Mm-hmm. Yeah, and some of the problems inherent with the technology today is that it's so brand new. It's in terms if you want to start it at Satoshi white paper, you want to start it at Ethereum launch, you want to start it at when blockchain really started hitting the zeitgeist. It's either way you look at it, it's a brand new technology in the grand scheme of things. It's still going through its teething stages. We're still figuring out where could best provide value, how to best implement that, how to best to pitch it, whether to mention it at all. I mean, these are all growing pains that obviously I'm sure you're familiar with. But how about on the investor side, on the VC side, on the consumer side, we're starting to see more and more companies come out, more and more projects make promises. But on the investment side, on the VC side, have you started seeing more competition? More VCs fighting over the same startups. If you go to Silicon Valley, I'm sure the competition is there in the traditional world. All the VCs are kind of want to be the big dog. Is there yet that competition in the blockchain VC world, or is it still, hey, there's just not that many players, there's not much capital there, and there's so it kind of like, hey, if you want to invest in a blockchain startup, you'll be able to find one pretty easily?
That's another great question. I mean, you've been really firing away. I think that, so let me just be clear. Blockchain deals, especially the good ones, are incredibly expensive, incredibly competitive, because expensive is a function of them being competitive, and incredibly worth your while, right? And there has been a crazy influx of capital into this market, especially from VCs, right? So you've got established VCs like Andreessen and Horowitz, that have raised, I think, close to 800 or something. They've got $875 million assets under management, or at least that's what their website says. You've got very, very established players like, again, Andreessen. You've got established players like Sequoia. They're eyeing this space very, very closely. And then you've got these new kind of specialist players, you could call them kind of like crypto VCs, that tend to be smaller, but very, 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 you could say, elegant in their approach, very understanding of the intricacies, right? When we're talking about the differences, right, the slight differences between, so the fundamentals are not changing, but for example, building a business that is not yours and that needs to accrue value, through a network of sorts, is a brand new thing. And so you need specialist kind of funds, not only to understand the opportunity just to fund this in the first place, but to actually provide that kind of added value, once the investment has been made. And so, long story short, I mean, first of all, VC is just bound by locality, right? And so, obviously, in Silicon Valley, you're going to see much more competition for deals, even when it comes to crypto. In Europe, I believe that the European and Israeli market is severely undervalued, right? So you've got this really interesting opportunity, at least for me as an investor, to find those gems early on in Europe and really take kind of a foothold here. Do I believe that the competition will increase? Undoubtedly, right? It's going to increase because the more capital flows into this space, and the more micro VCs and first-time VCs and emerging managers kind of just come out of stealth and continue to raise capital, there's going to be a lot more competition, especially in Europe. But just to drive a little point here, it's really interesting that Europe has actually been one of the more collaborative you can say areas when it comes to VC funding. And the reason for that is because there's been very, very low funding comparatively, right, in Europe. And so just as another example, right, we've got large institutions and some of the biggest players in the space, like Binance and from Büsche out of Asia, who, for example, have recently joined us or followed us into a seed round of a company called Biconomy, right? And so we're kind of seeing where, because again, there's this kind of funding gap. And so all of these global players, whether they're Asian players or American players, right? I mean, Framework, a very, very kind of highly regarded DeFi specialist fund that's been kind of entering deals in companies or protocols like Aave, right, which are based out of London, I believe. And so you've got this really interesting spirit of collaboration, and I believe that it's not going to last forever. I believe that as the competition ramps up and you got more and more capital entering the space, the European and perhaps Israeli space, we kind of bundle it together, are gonna look very, very different. And that's an interesting point too. But yeah, overall, very competitive landscape, and ultimately what you need to be able to do is just win deals as a VC, and not only win deals but actually find the best deal flow and then win those deals. And so with more capital in the market, it's getting more and more difficult.
Well, luckily you are forward thinking and you got in before, while it's still undervalued and before it really gets cutthroat. Because that's good to get in on the ground floor, as they say. That's all the questions I have for you, Lior. This is now your turn, or your chance to plug whatever you want. Plug your favorite portfolio company, plug your favorite song, plug anything. Go away.
Stairway to Heaven, first of all, by Led Zeppelin. But
Nice.
in terms of plugging anything, I think I would plug just my own perhaps advice or wish for the space. And I would say that, the thing that I'm most concerned about right now, and the thing that I'm researching and really thinking about the most is what would it take for our industry, for this market, for our kind of ecosystem to reach the $100 trillion market, right? What would it take? Where are the pulls and levers that we can actually kind of play around with to understand, that would be a guaranteed direction. And I believe that a lot of it has to do with values, the kind of values that those blockchain companies, the ones that we're kind of, even backing every single day, and we're working with them every single day. I believe that how these guys ultimately represent their values and build case and understand, look, this is what we're doing and this is the real mission, right? Is a big part of that, because really owning the conversation around blockchain, is really important. And I think that today, blockchain really stands, again, the narrative stands for the democratization of assets, democratization of access, of services, a bunch of things. But in the fields, we're seeing that that's really true, right? Crypto, in my opinion, is as elitist as it gets. If you'd like to interact with DeFi protocols, for example, and provide liquidity or do all kinds of interesting things on chain, you need to be very smart or very, kind of tech savvy. You need to really, really understand this market. And so, what about that is democratic? I don't think much, right? And so really kind of my thinking or my wish for the industry is that we really figure out those pulls and levers, that can propel us forward to the $100 million. And I think it's going to be rooted in incentives, in values, and you could say kind of mission and how we portray that to the world. And last but definitely not least, the innovation that's behind all of this. So yeah, I think that's about it.
Well, beautiful sentiment. I also like to think the most centralized wealth of in any finance is DeFi. But let's hope that with time that changes as more people get in the space, more people understand it, and more dApps are built upon it. Lior, thank you so much. I'm sure that you will be doing some of the driving push behind all that, making it a reality. So Lior, I appreciate you taking the time. Wonderful to get to hear from your point of view, kind of the view of a crypto VC, as well as your view overall on the space, supply chain security, all that good stuff. So thank you for taking the time. I'm sure our viewers did as well. And for all of us here at Reimagine 2021, I'm Yonah Hochhauser. Thanks for watching.